Well, it's been a while since we checked in with our OSU ag economist, Dr. John Michael Riley, about what's happening with the grain markets. So, John Michael, what's been going on? It's been about a month since we talked to you.
Absolutely. Since that time, we got a new World Ag Supply and Demand Estimates report came out. It's a little bit stale now because it's been a while since it was released. But in that, no big changes from the January report. It was mostly in line with trade expectations, but inevitably you get a little bit of bounce in the marketplace, and that's why I've always said and continue to say, if you can stay out of the market, stay out of making any pricing decisions when that report is in the midst of being released, try to do your best to do that.
Well, today we have a warm Oklahoma windy day, which is really welcome for us after coming out of that cold snap. But did that cold snap have any impact when it came to the wheat market?
Absolutely. If I don't want to necessarily get too deep in the agronomics and the production side of it. Let's stick with the markets. But the market is, as I see it, the market is expecting there to be some impact on wheat yields for our winter crop. Again, we started getting that cold weather about the time that the report was released. Since then, the market really rallied for a couple of days following the report. A lot of that had to do with the winter freeze and the cold snap across all the U.S. And also we're getting a lot of positive news from exports. Our exports for wheat market is on pace with normal, but it's really beating expectations. I think there was a thought that exports were going to be a little slow given all of the upheaval in some of our trade talks. So all of that's really having a positive impact. It's come down since then, but at the moment it was looking pretty bright, and I think it's still mostly there.
So let's talk a little about the corn market right now.
Well, corn's really interesting. We've seen a big, strong push in corn prices. One of the key factors that we look at is that bean to corn ratio, which is the soybean price relative to the corn price. On a typical year, that's about 2.4, meaning $2.40 per bushel for soybeans for every $1 of corn price. We're well below that, which gives us the indication that corn prices are much stronger than soybean prices right now. A phrase that we use in the industry there is the corn's trying to really buy acres. And so that's been happening. We started seeing it in late January, early February. It's still present in the marketplace. It's not nearly as strong as it once was, but that's something that we're looking at. As farmers are making their decisions, I think that we're going to possibly see some of that strength in the corn price play out in our acreage numbers. Some early numbers with regard to acreage, we won't get that report till the end of March, but CoBank has come out and said corn acres are going to be up about 4%. That's going to, the loss there is going to be soybean acres. So I think we're seeing that strength in the corn price play out there.
So what about with cotton?
CoBank also came out with an estimate for their expected cotton acreage. 10.3 million is what they're projecting that to be. That's going to be down from just over 11 million acres last year. Also, National Cotton Council released their acreage projections. They're a little bit lower than CoBank at 9.6 million acres. So all of this is really in flux as producers are making their decisions for the spring.
So with all of that, what is your main message to producers as we're kind of hopefully getting out of this cold stretch and really the wheat's going to hopefully start coming up really nice? What is your advice as they're really kind of looking at their crop at going into harvest?
Well, one of the continuing factors that all of us in the business and economics side of agriculture are seeing is a lot of concerns about the farm economy and just prices and being low. So still going to stick to my guns on pay attention to your records, your cost, do everything you can to do everything as efficiently as possible, and not necessarily cut costs, but just be conscious of your expenses.
All righty, thanks, John Michael. John Michael Riley, OSU ag economist here at Oklahoma State University.